Welcome class to Fundamentals of Accounting class. Our topic today will be recording of accounting transactions. From our previous topic, that is the introduction of Fundamentals of Accounting, we say that accounting is a systematic process whereby we record any economic information that takes place in an organization. So we shall be starting now the accounting process. I know with the previous topic we defined some various terms. We defined what is accounting. We defined the basic principles and concepts that we apply in accounting. So today we shall be now concentrating on what the real accounting is. To start with, we shall start with the bookkeeping equation, or what we refer to as the accounting equation. For anybody who wants to become an accountant, it is good for him or her to understand this bookkeeping equation, or what we are referring to as the accounting equation. The bookkeeping equation is an equation of the form assets is equals to capital plus liabilities. Yes, asset is equals to capital plus liability. We usually relate it in an acronym whereby we say that A is equals to C plus L, where A stands for asset, C stands for capital, L stands for liability. Let's now look at the individual components of this particular bookkeeping equation. And we shall start with the first one, which is assets. And when we talk of assets, we are talking of resources owned by an organization as a result of past economic activities. Like, for example, when a business buys a car, that is an asset to that particular business. There was a past economic activity, that is the purchase of this particular motor vehicle. And so these assets are further classified into two. Or the first one is what we refer to as non-current assets. These non-current assets, for those of you who did business studies in high school, you refer to them as fixed assets. But currently we don't refer to them as fixed assets. We refer to them as non-current assets. These are assets that are expected to be in a business for a period of more than 1 year. And these assets include things like premises. Premises are the buildings. We have things like land. We have things like motor vehicles. We have motor vehicles. We have other things like equipments, etc. Those are some of the examples of the non-current assets. Then the second classification is current assets. In your former maybe accounting class or business studies class, you used to refer to them as short-term assets. Yes, just like the previous definition used to refer to them short-term assets. These are assets that are expected to last in a business for a period not more than 1 year. And these assets include things like stock, also referred to as inventories. Stock, also referred to as inventories. The other thing is the debtors. Debtors, they are also referred to as accounts receivables. Debtors or accounts receivable or trade receivables. These are people who have bought stock or items from the business on credit. They have bought like today, and they have promised to repay the stock later. We also have things like cash in bank. We also have cash in at hand. Yes, those are now the current assets. All these are the resources owned by the business. Let's now look at the other component, that is capital. I'll have to clear this. I'm hoping you had taken your short notes on that. So when we talk of capital, capital is the owner's contribution or the owner's net worth in a business. And when we talk of capital, it is things that the owner of the business has brought into the business. Like for example, if our business is a sole proprietorship, we are talking of the things the sole proprietor has brought into the business. If we are talking of a partnership form of the business, we are talking of things partners have brought into the business. And these things or resources can be in form of money or other assets. So anything that the owner of the business has brought into the business, it is called capital. Let's go to the third component, that is liabilities. For liabilities, these are business obligations. These are business obligations as a result of a past economic activity. Yeah, like for example, when the business wanted maybe to buy things like land, and they didn't have enough money, they went to the bank and borrowed some money in form of loan. That one is a liability or an obligation that a business is expected to be to honor or to pay at a later date. Just like assets, liabilities are classified into two. The first classification is non-current non-current liability. When talk of non-current liability, this is an obligation that is supposed to be honored in a period of more than 1 year. And these particular obligations include things like debentures. Debentures. A debenture is called a loan from the public. This is where the bank, the organization finds the need for money, and it approaches the members of the public to lend it some money, and in return, it gives the members of the public things referred to as debenture certificate. And with this debenture certificate, as per the agreement of the organization and the person giving his or her money, they will pay the actual amount at a later date, and maybe annually or at an agreed period of time, they will be paying the owner of the money some interest. That's what we call a debenture. We also have the long-term loans. Long-term loans. These could be loans from banks, microfinance, SACCOs, and other sources. That is now the non-current liability. Then the second classification of liability is current liability. Current liability. This is what we used to refer to as short-term liability. These are obligations of a business that the business is expected to honor within a period of 1 year or less. So, and these things include things like creditors. Creditors, these are people whom the business has bought from items or stock on credit. And for creditors, we can also refer to them as accounts payables on trade payables. Yes. The other item of current liability is bank overdraft. A bank overdraft is when an individual borrows from a financial entity like a bank or withdraws more than amount of money more than what he or she has in his or her account. Like for example, a person whose current account has let's say 30,000 shillings. And this particular individual is in need of 50,000 shillings. He can approach the bank and request the bank to give him or her 50,000 which he requires, and then once the money is deposited in that particular bank account, the bank will take the excess that the person had withdrawn from that particular bank. So the excess of in this case will be 50,000 minus 30,000, and whereby we shall get 20,000. The 20,000 that we get here is what we are referring to as bank overdraft. Yes, we also have another current liability, which is accruals. With accruals, these are expenses or payments that the business ought to have paid, but it has not paid at the time when you are making the recordings. Like for example, when you talk of wages, wages are expenses of the business, and the business is supposed to pay its workers wages maybe periodically, like after a month, a week, based on the agreement they have with their workers. And if by the end of the month the business has not paid the wages, that wages is called an accrued wages. Yes. So class, it is my hope that you've now gotten these particular components of the bookkeeping equation. So I want us now to do a question so that we can understand these bookkeeping equation. And as we have said, it is an equation. When you talk of an equation, it means that whatever is on the left hand side of your equation must balance on with what is on the right hand side of the equation. Please note that. And as we go on with our accounting lessons, please be noting this or be remembering this equation. So let's have an example. Okay, this is the example. Example 1. We are told that Sim Mulungi sets up a new business. Before he actually sells anything, he has bought motor vehicles of shillings 3,000. This is motor vehicles. Motor vehicles of shillings 3,000. He has also bought premises of shillings 7,000. We have shillings 7,000. That is premises. Then he also has bought stock of goods worth shillings 2,000. He has bought stock of goods worth shillings 2,000. He still owes shillings 800 in respect of them. He has a debt. In simple terms, he has a debt of shillings 800. We can call this one, maybe these are the debtors that he has in respect of the stock that he had bought. Then he had borrowed shillings 4,000 from D. Evans. he had borrowed shillings 4,000 from D. Evans. So we shall not call this one D. Evans because it's something that he had borrowed. So we can say D. Evans had given him a loan of 4,000. Then after the event just described and before trading start, he had shillings 300 as cash, and that is cash, 300 shillings cash in hand, and shillings 600. This is cash in hand, and he had shillings 600 as cash at bank. Then you are required to calculate the amount of his capital. So you've been given these items, and now the question requires you to get capital. So that means amongst the list that we've been given, there are some assets and there are some liabilities. Before we get our capital, we have to identify these items either as assets or liabilities. So class, motor vehicles, ni nini hapo? What are our motor vehicles? Motor vehicles, we said they are, yes, assets. We can have A to represent assets. Premises, we said it's what? Assets still, eh? Good. Stock, we said it's also asset. Debtors, sorry, this is not this. We are told that he had he still owes 800 shillings in respect of them. That is not debtor. Sorry for that. It is creditors because they had bought stock on creditor, yes, which they had not paid. So this one is not it's not debtors, it is creditors. So, and creditors, we say they are what? Liabilities. Loan, we say they are what? Liabilities. Cash in hand, we say they are what? Assets. Cash at bank, we say they are also assets. So when after now analyzing your figures just like that, what we shall do is now to write our equation. And we said our equation is assets is equals to capital plus liabilities. So for us, we have to get, and what we have been given the assets, we have been given the liabilities. What we don't have, it is capital. So we can write our equation so that it can give us now the capital. So what shall we do? We shall say, we shall now take these liabilities on this side so that we can be left with the capital on one side. So this is plus liabilities. You know, when we take an item on the other side of equation sign, the sign before that item changes. This one was plus, so it will change to minus. So we shall say capital is equals to assets minus liabilities. So having now done that, we can now get total assets and total liabilities. So we can use this space and we shall have now total assets. We get, so that we get the total assets. Our total assets, we had motor vehicles. We can say it is motor vehicles, which is 3,000 plus premises, which is 7,000. We add stock, which is 2,000. We had what else? We had cash in hand, which is 300. We had also cash at bank, which is 600. So we add them together. So what do we get? This is 3,000 plus 7,000. That is from your calculators. What do we get? That is 10,000. 10,000 plus 2,000, we get 12,000. 12,000 plus 300, 12,000. 300 plus 600, we get 12,900. So our total asset, it is 12,900 900 shillings. That is our total assets. Now we can get our total liabilities just the way we have done with the assets. Total liabilities. What shall we have? We had our liabilities, we had listed them. The first liability is creditors. How much? 800 shillings. So we shall say it is 800 plus a loan of 4,000. Do you have any other liabilities? No. So we can say it is our total liabilities will be 800 plus 4,000, and we get it is 4,800. So having now gotten our total assets and total liabilities, we can now replace assets and liabilities in these equations so that we can get the value of our capital. And we say that capital can be written as C. Yeah? We can have C as an initial for capital. Yeah? And we say C is equals to total asset, which is 12,900. You subtract. No, this is I had written 48,000. It's supposed to be 4,800. Yeah? So subtract 4,800. Yeah? So what do we have? So our capital will be, we shall have 0, 0, 1. 12 minus 4, we get what? 8. So the capital for this business, or the owner's contribution in this business, was 8,000. So we can say capital, or the owner's contribution, was shillings 8,100 shillings. That is how we do it. So you can see we had been given the list of assets and liabilities. So it's upon you now to identify the assets as the items as either assets and liabilities. Then you remember the equation, and then you relate so that you can get the capital. That's what we have done. So that's how you do it. So we shall have an example 2 on the same. I'm hoping you have copied the solution. Okay, we've been told that D. Moody had the following assets and liabilities as on 1st April 2002. In this case, our items have been listed down, and we have things like creditors. For creditors, we had been given, all these ones are in shillings. For creditors, we had been given as 15,800. We also have equipments. For equipment, we've been given 46,000. For motor vehicle, then we have been given motor vehicle, which is 25,160. 25,160. Then you've been given stock as 24,600. And then we have debtors. We have them as 23,000 and 80. 23,080. Then we also been given cash at bank. We have 29,160. Then we have cash in hand as 160. Class, you remember in the previous example that you've just done, we started by identifying the items either as assets, capital, or liabilities. So class, let's identify these items either as assets, capital, or liabilities. Creditors, tulisema ni nini? Creditors, they are supposed to be what? These ones are liabilities. Equipments, we say they are what? Non-current assets. Motor vehicles, we say that they are supposed to be assets. And you remember these are non-current assets. Stock, we say they are what? Current assets. Debtors, we say they are current assets. Cash at bank, they are also current assets. So cash in hand, they are assets. So we have identified our items just in form of liability, assets, and assets. So in this question, there is something that is missing, and that is capital. And that's what the question asks us to get the capital. So just like we did in the other case, you write the bookkeeping equation, whereby we say that assets is equals to, remind me what we said, it is capital plus what? Plus liabilities. Good children. Oh, you are not children, you are students. Yes, capital plus liabilities. Yes. So because it is capital that we don't have, so what do? We shall have to take liabilities on this side so that we have capital on one side. And we shall say capital is equals to assets minus liabilities. Liabilities. Good. Then, so for us, we shall start by having the total assets. Let's have our total assets. Our total assets, we have equipment. We can now relate on a column format. So we have the equipment, which is 46,000. We have motor vehicles, they are still assets, which is 25,160. We have debtors, which are 23,080 shillings. We have cash at bank, which is 160. Then we have, that is cash in hand. Then we have cash at bank, which is 29,160. Yes, we have it right. So we can now add this and we get, so from we've left stock. Thank you. Stock, which is asset, it is 24,600, like that. Have we listed all our items? It's good. Then it's good you to first of all check whether you've written all of them. We had how many assets? 1, 2, 3, 4, 5, 6. How many have we listed here? 1, 2, 3, 4, 5, 6. So we have listed all of them. So we can now add them up. This is 0. This is 6 plus 8, that is 14. 14 plus 6, we have 20, 26. So we carry the 2. You remember those sums when you are in primary schools. 2 plus 1, that is 3 plus 1, 4 plus 1, 5. 5 plus 6, we have 11. We carry 1. 1 plus 6, that is 7. 7 plus 5, 12. 12 plus 3, we have 15. 15 plus 9, 24. 24 plus 4, that is 28. We carry 2. 2 plus 4, that is 6. 6 plus 2, that is 8. 8 plus 2, that is 10. 10 plus 2, that is 12. 12 plus 2, that is 14. So our total assets are equal to 148,160 shillings. That is our total assets. We can have our total liabilities. Total liabilities. For our liabilities, we had only one liability, which is creditor. So our total liabilities, we can just say, is equals to 15,800, and that is the total liabilities. So we can now use the total assets and the total liabilities to get the value of capital. So we can say capital is equals to total assets, which is 148,160 subtract 15,800. We can, because I don't have a calculator, we can write it in a columnar format so that we can get the values. 160 minus 15,800. So when we subtract that, we get 0, 6. This is 11 minus 8, we have 3. This is 7 minus 5, we get 2. 14 minus 1, we get 13. So our capital for this particular business is 132,360, and remember the currency for this is shillings. So we can write it as capital is equals to 132,360 shillings. So the owner's contribution for this business, which was called D. Moody, is 132,360. Yes, that is how you do you apply the bookkeeping equation. So that is it. In our activity, in our activity, I'll give you an additional question for you now to practice on. Yes.